Welcome to Journey to Become Wealthy, Day 35. My name is Kelvin Reed, and today we are here to discuss, is there a stock market crash coming? Before we get into that, you guys make sure you like and subscribe to the channel. If you haven't already, hit the bell so you can get notifications when I post new videos. Also, go follow my Instagram. I post videos there as well, where you can follow me and you'll see all the live videos. So today I went live. Today I actually went live during the market. I went live at about 2 p.m. Central Standard Time, showing what was happening in the markets. So is there a stock market crash? So to start, let's talk about what's a stock market crash, right? A stock market crash is a drop in all the stock prices. So that means people are selling stocks. All the prices of the entire market is coming down abruptly. That is the bearish market that we've been talking about for the past couple weeks, signaling that 2022 will be a bearish year. We discussed it, right? And this happened based on Fed news today. The Fed dropped some news, which we already knew these things would come. I've been talking to you guys about this for the past few days. We talked about the Fed interest rate hikes and several other things that the Feds are doing based on inflation rates to what they call, quote unquote, help the economy, but this scares out big businesses. So let me show you guys the article that we got. Let me show you guys the article we have. Stock market news live updates. Stock futures open flat after Fed minutes prompt sell-off. Immediately, people, this is when the stock market started coming down. It started coming down. We had already had a red day yesterday, but that was just a correction. There was no news to support that red day. On today, the Fed pretty much crashed the market. They pretty much crashed the market. And that's fine, right? Because again, we know how to make money on the way up and on the way down. On the way down, we'll be out here putting out put options if necessary. And we'll be doing this. So if you guys haven't already signed up for options, make sure you guys go sign up for options through your Robinhood or your Webull account or whatever brokerage account you're using. So let's check out this news. Stock futures slipped Wednesday evening heading into overnight trading after equities did an about face in the earlier session, plummeting from record highs as investors mulled the likelihood of tighter Federal Reserve policy and interest rate hikes as soon as March. We've been talking about these interest rate hikes, right? We talk about how that's when I thought that the market would start coming down. Apparently, the news today, preemptive attack, and things start coming down today. So that's fine. Contracts on all three major indices were down to extend a bearish day, spurred by the release of minutes from the Federal Open Market Committee's meeting December 15th that flagged concerns from policymakers about worsening inflation and signaled more aggressive intervention by the central bank. Renewed pressures in tech, because we have tech heavy portfolios, right? I said we were going to be rotating. We're rotating out of the tech sector into financials and healthcare. If you watched me earlier, you should have been looking at that, and I'm actually going to mention more that we're going to be getting into today. Renewed pressures in tech amid interest rate worries sent the Nasdaq spiraling 3.1% in its biggest drop since March of last year, and the S&P 500 shed 1.9%, dragged down by losses in real estate. The Dow Jones Industrial Average tumbled more than 1%, falling for the first time this year. So what we're going to see pretty much when we look at the futures, every future is going to be down, and it's going to be down bad. And we saw that in our portfolios today. And I'm going to teach y'all how we're going to hedge against that, how we're going to rebalance our portfolios, as we've been discussing, how we're going to rebalance our portfolios in order to balance out and fight against this bearish market. So we actually like tech for all of 2022 in our outlook, but there's no doubt that tech is going to take it on the chin when the yield curve does what it does. Wells Fargo, CIO of Wealth and Investment, Daryl Cronk, told Yahoo Finance Live, Fed meeting minutes suggest that long duration assets like tech or REITs, which is real estate, that are interest rate sensitive will really come under pressure in moments when you believe the Fed is going to take a more hawkish stance. The minutes underscoring this hawkishness helped the benchmark 10-year Treasury yield top 1.7%, its highest level since April. All right, so that's pretty much enough of that. I'm going to let you guys read more into it, but you guys know basically we're going into this bearish market. We're going to start seeing stocks pulling back we're going to start to see stocks come down, and we are going to be playing it a little differently in order to make sure we make our money this year. We're going to be building out primarily on our foundation, building out a heavy foundation, and we're not going to be going so hard on high growth stocks like tech as we have been doing in the past. So again, you guys are just with me on day 35. I built up my portfolio starting last year, so this is going to be you guys' first year starting, but we're going to be doing this thing together, so I want you guys to come on. We're going to walk through it together. All right, the Dow is down 0.64% as of the time of this recording. The S&P 500 is down 1.46%. The NASDAQ is down 2.83%. As far as companies that are the pre-market movers, look at this. Pfizer sitting at the top of the list, up 2.31%. If we got into a healthcare play, whether it was Pfizer or Johnson & Johnson last week, we might be seeing some green. Might be. We'll be checking out the stock heat map in a minute to see what all plays are up on today. And it wasn't very many. There wasn't very many. If you looked at it earlier, you saw there's a lot of bright red out there. A lot of bright red. So the market was bloody everywhere. Nielsen Holdings, we have a lot heavier negative number, which is down 8.60% than we do on the positive side. Again, that is a sign. That is a sign on where the market is going. I know it's just one company, but when we look at all of them, we look at all the averages, right? We try and look at all the averages on top of the futures, and those are the signs that we normally look. For the past 2 days, I think I pretty much hit it on the head, calling the negative and calling the correction in the market. The Hang Seng actually did not come down too heavy today. However, my tech plays like Neo and Baba actually saw some gains, while Neo came back down to the $29 range. So Hang Seng is down 0.16%. So I guess we can call that pretty much flat on the day. We're going to call that pretty much flat on the day for the week. Let's check out the Russell. The Russell is showing down 3.30%. You guys know, since we've been watching these videos, we have not seen the numbers this high in the negative yet. 35 days so far, we have not seen the numbers this high in the negatives. So that is major. And if you guys know, I've been teaching this. Bitcoin and crypto pretty much follows the stock market. The stock market came down heavy today, therefore we saw our crypto come down with it. So first, let's go ahead and get into our stock market heat map, just so I can kind of show you guys where the sectors are and where the money's going and coming out of. Look at it, bright red. It is bright red all around pretty much. The only place that's showing green is we have the healthcare, we have a very few financials, and we have some energy and basic materials showing some green. So let's start off with the tech sector. It looks like down the heaviest is going to be NVIDIA, down 5.76%. Actually, Adobe is down 7.14%. We got in there at 540 a couple weeks back. But again, if we took it up, if we let it run up with that 570, you should have been able to take out some profit off of it. And either you got all the way out because you saw it coming down, or you still in this and you're going to be holding long term. Because I'm not sure how much of the tech sector we're going to see going back up or how fast. So if you have this, you make sure you're either holding for the long term or averaging down. And not right now, though. Not right now. We want to wait till we see these things start to get another catalyst back up before we begin averaging down. But if you're in this, remember I said nibble. I did a day trade. Remember I told you I got in and got out. I sold this in the day, and I did a call option on this one. So hopefully you guys aren't still holding it, but it is down 7% on the day. We have Square down 8%. So Tech got it heavy. Tech did catch it on the chin. Tech pretty much caught it heavy. A lot of bright red in here. Everything. Everything is pretty much red. Let's see. Communication services, red. Facebook down 3%. Google is down 4.59%. Now again, for those of us who are holding long term, these are actually prices in good companies. We're gonna find good companies, and we can be buying low. But we have to know when is the bottom. You don't want to buy what we call a falling knife. A falling knife. Imagine trying to catch a falling knife. You'll be cut, right? So in this case, as long as these stocks are coming down, we want to be persistent and wait for a good point to buy. Also, remember to make sure you're doing your technical analysis, your TA, and your due diligence to know, hey, what price is actually a good price. Although it's coming down, it may never come back down to a good price. Or if it comes below its 52-week low, that means this thing has potential to continue falling, and that is something we do not want to catch. We do not want to catch a falling knife because it will burn us in the end, right? So we have to be careful with these. Just to mention a few, one, but that I was actually asked about earlier, and it was NVIDIA. I was asked about NVIDIA earlier today, saying, hey, is it a good stock to get into? I told him to hold on a moment because as we discussed, we're going to be looking at getting into financials. As you can see, if he'd have bought NVIDIA at the price me and him were discussing, he'd have been down right now about 5%. He'd be down about 5% right now. So we want to wait. We want to give this thing enough time to cool all the way off, and then give it some time to start coming back up for us. And we're not looking for a bull flag. We're looking for some real buying pressure on the way back up, a real catalyst in the market to support that. Even financials is actually down on today. It's not down heavy, but it's down, right? So JP Morgan was down 2.41%. Wells Fargo is only down 0.87%. I mean, a lot smaller number compared to a lot of these 3, 4, 5, 6, 7, and 8% numbers. Bank of America is down 1.69%. Again, a lot smaller than 4, 5, 6, 7, 8%. PayPal down 2.0%. As you guys know, I am in PayPal. And in a minute, I'm actually going to go into some of the companies that I think we should kind of be trying to look into getting into. So that's going to be one of the last things I'll talk about. Goldman Sachs down 2%. Again, nothing major, not as heavy as that 4 and 5% number. Healthcare is pretty much green. It shows some good green here. Drug manufacturers, primarily drug manufacturers. So that's Johnson & Johnson. That's Pfizer. We got Novartis and Merck & Co. So definitely, I mean, we can look into it. For me, I'll be looking at Pfizer or Johnson & Johnson. Especially Pfizer having the good news from Joe Biden saying that he's going to try and get production doubled. And it didn't really jump too big, but again, it may be something to just kind of hold us steady and hedge. I'm not going to say buy in 100% yet because I have not done any great due diligence in the company myself in order to be looking into it. I've been spending more of my time looking at the financials because healthcare can be risky, especially with Omicron. You know, you never know. One day they say the vaccine is working, the next day they'll say, oh no, the vaccine is giving you the virus. And here you go, we got a whole topple of the sales. So financials are pretty much more steady and more stable. So we're going to talk about that and which ones I like. Bible was up. So consumer cyclical, again, the entire sector is red, but Bible was green. Energy showing some green, some strength. That's oil and gas pretty much. Real estate down. Utilities are showing pretty mixed. Consumer defensive pretty mixed. Walmart up on the day for today. And Procter & Gamble up, but very flat numbers. But primarily, everything is in the red. Now, I'm not saying for those of us who are long-term investors and you plan to hold these companies for 5 to 10 years, by all means, buy you a piece of the pie. Again, if you're starting off with a smaller portfolio, though, make sure you're not going all in on a bunch of companies. Make sure you find 1 or 2 or 3 companies that you like, and you go in on those companies. And make sure that you're consistently adding like I am. Let's check out crypto heat map. Bitcoin has come all the way down, y'all, from this $43,000 range, $47,000, $50,000, $60,000, all them different high marks that it's hit, to $43,593. So Bitcoin is definitely at a buy. Again, prices are coming down, but Bitcoin always makes its return. I have been able to make several profits off Bitcoin at these lows. So even I told you guys, anytime Bitcoin comes down this low, I'm buying. I bought $200 more of Bitcoin at the $43,000 price today. I did that. Ethereum is steady coming down. Still a buy zone. If Ethereum continues to come down, I will be looking for it. If it hits the $3,000 range, that's when I will be buying more because of how low my average is. I'll be buying more at the $3,000 range. What we got? Sandbox and Mana. They came down 10%. Now, if you know cryptos or NFTs or any of those things, they have major swings, right? These things can lose 30%, 40% in a matter of minutes, and then shoot right back up 120% in that same time span. So do not let these red days scare you away. Again, you have to be strategic. Know your entry point. And once you get in your entry, you can fire and forget. until you're ready to add more or continue building out your portfolio. You buy what you want. When it goes back up, you sell out. You take you some profits. You use that money in order to continue investing and building out your portfolio. You allow your money to make you money. Your money should be a tool to make you more money. All right, so let's go. Let's see what we got next. All right, so what I wanted to have for you guys was I want to chart out some of the things that I think we should be trying to get into again for this rotation. I want to chart out some of those things, but I have not had a chance to. But I will show you guys previous things with Bitcoin, right? So again, Bitcoin hit the $62,000 mark in April, came all the way down. It came all the way down as low as $30,000. April, May, June, July. So 3 or 4 months it came down. It hit the $30,000 mark and shot all the way back up to $51,000. That is already about a 50% return if you waited till it got to the bottom. Now, again, when I say we have a stock market crash coming, I say that we have a bearish market. You guys see how this is with Bitcoin. April 14th all the way to July 18th. That is, again, about 3 to 4 months that the market was coming down. Bitcoin came down. And then it finally made its point back up, right? It finally made its rise back up, and it came as high as $66,000 from $30,000. That is 100% returns if you caught it on that low. Again, I am not afraid to buy Bitcoin at $40,000, $30,000, or any of those values because I know that it has always returned, even here. This is in 1 year, this thing has done this 3 times. It went from $30,000 back up to $60,000. Came all the way back down to $30,000, back up to $60,000. Well, actually, that's twice in 1 year. I apologize. So those are the type of movement that we can expect to see from crypto. Those are the type of moves we expect to see from crypto. And I can go as far out as the 5-year mark, but we're not going to do that. That is way too much. And as you see, using the charts here on Robinhood, it's not going to give me anything just really too detailed anyway. So we don't really care to see that. But what I'm going to talk about is, and I have these things in my phone, right? I created me a note in my phone to show, let's talk about the different companies I think that we should be getting into as of right now for the rotation. We're going to, Goldman Sachs being one of them. Goldman Sachs is a good foundational company. It is a major financial company. Goldman Sachs Group engages in global investment banking, securities, investment management, which provides financial services. It operates through the following business segments: investment banking, global markets, asset management, and consumer and wealth management. So that is one of them. Another one that we've been looking at, Bank of America. And these are going to be single companies, right? These are the single companies that we're going to talk about getting into to kind of hedge against all the tech hits that we're going to see. The tech hits we're going to see. Bank of America. And actually right now I'm not even going to go into the technicals because we talked about the technicals on Bank of America and Wells Fargo several times. I may not talk about them tonight, but I will probably touch up on it tomorrow. Bank of America. Bank of America is a bank and financial holding company which engages in the provision of banking and non-bank financial services. It operates through the following segments: consumer banking, global wealth, and investment management. Global banking, global markets, and all other. Now we got Wells Fargo. And again, these are only for this rotation. So I am not going to tell you guys when you can buy or when to sell. I'm only going to tell you when I am going to buy or what I am planning to buy, what is on my watch list, and what I am going to sell. So that is all I can tell you because I am not your financial advisor, but just I want you guys to know to look at these things and have them in mind, put them on your list, and make sure you do your research or go look at my previous videos for the prices that I'm going to be looking to buy them at. Wells Fargo & Co. is a diversified community-based financial services company. It is engaged in the provision of banking, insurance, investments, mortgage, and consumer and commercial finance. So these three, banking, financial sector, I'm mentioning them because they are stable. They see the most chance of making profits when the Fed starts increasing interest rates because they will be directly affected positively by those moves that the Fed is going to be implementing. So that is why I am advising for those, right? I am advising for those. I got one more, and I mentioned it earlier. I told you guys this company is, and to me, it is my savings account. I treat this company like my savings account. Whenever I don't have anything else to do with my money, I leave my money here. And if you look at it, if you look at the record right here, the chart, it has a 24% return on the money for the year. And we did the math on it earlier. At 5 years, it made 104% return over 5 years. So if you look at an average, 5 divided by 100, that is 20% returns on your money every year. You are not going to find any bank that is going to give you a 20% return on your money every year and pay you. They pay you a dividend every quarter for having your money invested into this ETF. And this is Vanguard Total Stock Market ETF. And this is only one of them. So you guys, again, make sure you do your due diligence. Come in here and check it out. And you see right now, I only have 4 shares in it. Again, I move my money in and out of here as I see fit. I move my money in and out of here. As of right now, you'll be seeing me move a lot more money in than out. I had moved my money out and bought into some of these high growth plays, trying to increase my portfolio. And now whenever I start to sell those, I'll move my money back in here so that I can collect those dividends, first of all, and also so that I can see this 20% return on the minimum every year, right? Average. Let me see that 20% return on it. And if you come here, if you scroll down and actually look at the page on VTI, it tells you what sectors it is in, what percentage. So you don't even have to come in here, and you don't have to invest in tech on your own. You don't have to buy a single company. It has 26% of its investment in technology, 13% in financials, healthcare 12%, consumer cyclical 12%. And if you do want to buy single companies, you should be building your portfolio similar to what you see here. You want to have a balanced portfolio. You see how this is balanced? It will increase and decrease these values based on what companies are making the most profit. It was in technology 26%, which is the heaviest weight, because technology was doing the best in the years of 2020 and 2021. I'm willing to bet that we'll see more money being transferred into financial services and healthcare over the next few months. It also shows the top 10 holdings. So 24.85% of the total assets is Apple, Microsoft, Amazon, Tesla. So you don't even have to do the thinking. It does the thinking for you. It literally shows you what percent of its assets are in each company and which companies, the top 10 companies that it is invested in. Also, if you go to Yahoo Finance and look into VTI, I'm pretty sure you can find a list of every company that VTI has money invested in and the percentage rate, so that percent assets. So it'll show you all that information. It will show you all of that information. So you guys make sure you pay attention to those type of things when investing. Here. Again, price return on the percentage. 1 year, 25%. 3 years, 25%. 5 years, 17%. Almost that 20% range. So this is one of the things that I will be treating like my savings account. When we have those really heavy red days, or when I start taking my money out of all my high growth plays, I'll be putting my money here to sit, because this is much better than any savings account you'll ever get. And although this year will be different because we're going into a bearish market, they will be moving their assets around in a manner that will give you greater odds of seeing more growth potential on your money. So they'll be managing your money for you. This company will be making all the moves behind the scenes, and they'll be making you money in return. So you guys got to make sure you be looking into getting into this. For me, you guys see my average here is 227, and again, I've moved money in and out of here for the longest. As I start to get out of some of my techs and get into some of the financials, you'll be seeing a lot more of my money come to here to actually sit here and multiply and gain. So that is what we'll be doing. I do want, because I know a lot of you guys are new investors, I want to make sure you guys are prepared, right? Red days are not bad days. You have to know your entry price. You have to know your entry price. You have to be ready to get in and get out. Remember I told y'all, I always take my goodness, I lost my words. I always take my profits off at 20%. When I see 20% gains, I'm always selling something off the top, and what you'll usually see me holding is what is left. you'll see me holding what is left. Majority of the companies that I have right now in my portfolio, I have already taken some profit off of them, and I had a lot of it, and what you're seeing is what is left. Outside of Neo and Baba, those are two companies that I've had for quite some time, and I am down on those. So I have not already taken my profit off the top of those. And most of these are me building back up so that I can do it all over again. I was building the portfolio back out so I can repeat it and make that money again. Just a little history. I actually started out my account with $5,000. I started out my account in last February at $5,000. I took me and my brother asked me to start, and I started at $5,000, and I turned that $5,000 into the $20,000 that you see now. It is always possible that I can lose it all. It is always possible that I can lose it all, but our goal is to 100% this 20,000. Our goal is to 100% this 20,000. So we're gonna turn it to at the minimum 40,000%, $40,000 at the end of this year. That is what we want to see. We want to see $40,000 at the end of this year, and that is by any means. So we know that is not possible if all I do is sit my money in VTI and gain 24%. However, that may be a safer play for many of you. I'm going to let you know the things that I'm going to be doing daily and the companies I'm going to be looking into daily or weekly or monthly so that I can try and obtain that 100% gain. Even if I get 50%, I'm not going to lie, I'll be happy, but 100% is surely my goal. I thank you guys for joining me tonight. Hope you guys are ready for this ride because it's going to be a roller coaster. It's going to be probably many of our